Good afternoon, everyone. Welcome to the Masterclass by One Finance. My name is Sonam Khatri. I'm a VP Marketing at One Finance. Today, again, the Saturday afternoon, we're starting with an extremely important topic, and that is June month, the tax season time, right? Where we are going to discuss the essential preparation for your ITR filings. These masterclass are designed in such a way that you can take informed financial decisions. With the help of our qualified financial advisors, we are able to do this because they empower you to take these decisions in the right way and they prepare you for the right time. So let's get started with today's masterclass. Just to tell you, this masterclass is live right now on the One Finance website, the LinkedIn platform, and the Twitter platform. So whichever platform you're comfortable with, you can definitely go and watch this masterclass on those platforms. All right, so let's get started with today's masterclass. Let's welcome our today's qualified financial advisor, CA Arvind Rao. He's a founder at Arvind Rao Associates. Let's welcome him. He has around 20 years of experience in the income tax, personal finance, and business finance space. And definitely, he's here today to teach you all about this tax season. Arvind Rao, thank you so much. Welcome, please. Thank you so much for joining us today, and thank you for doing this masterclass for us. Through these masterclass, usually our viewers take away a lot back when it comes to their personal finances. When we talk about today, obviously it's June month, tax season, something that always everyone is hassled about. क्या करना है, कौन सा पेपर ढूंढना है, कौन सा डॉक्यूमेंट ढूंढना है, कहाँ जाके भरना है, and then that big numbers that start coming in front of you. I have to pay this much tax now. How I'm going to arrange for this? Yeah. Yes, a proper financial planning over the year can help you for these end moments. But now, suppose you are at the end moment, what you have to do. So, first, let's take a poll from the viewers. Are they ready for this ITR thing? Do they really face issues or not? So, let's go with the first poll. Have you ever faced issues while filing your ITR in the past? Trust me, Arvind, I have always faced it. I have always been dependent on some CA.
Absolutely, and I think people who are taking the poll should keep their hand on their heart and then click on this.
I'm keeping it. Yes, absolutely. I have faced problems. I don't think I'll able to do it without a CA with a proper documentation where I'll be hassled end moment. I'm just lucky that I'm a part of One Finance right now, which helps me and keeps me prepared for all of these days. Financial planning is done in right way that suddenly some tax numbers not going to hit me hard.
Correct.
But what happens with your clients? Is every year like this, or no? It's changing. It's getting better.
So, I think what I have observed now
Yes.
is that there are different types of people when it comes to tax filings. So, there are those who have taken it in for once that tax filing karna hai and I will do it properly.
Absolutely.
So, these are the people who are far better prepared and they are always well done with their documents. And then there are those people who are always late,
Right.
and who believe ki if I'm not seeing or thinking about this, it's not a problem.
That's true.
So,
That's true.
but yeah, I think one silver lining point to add here, which is why I think this masterclass on the 1st of June is relevant for all of you listening to this, is because there is a lot of record keeping and cross referencing that is
Absolutely.
happening by the tax department, and I'm sure a lot of our viewers here would have been getting messages. Specifically, November, December is the time when they start saying that you have not filed your return.
Yes.
There are certain transactions that we have seen in your against your PAN, so they encourage you to do this. So it is getting complex, and I think with a proper tax management, if it is handled, it will only make life simpler.
Absolutely, absolutely. All our viewers, let's just check whether what is our poll was saying that, all right, we have the poll results. All right. Yes. Oh my God. Yes. Hand on the heart. They have followed your right now.
Wonderful.
Definitely, they are facing issues. We should take them through this today's masterclass. Floor is all yours. Thank you so much.
Thank you, Sonam, for the generous introduction. And since we already had this chat, let's look at some of the things which we are today going to focus upon. Because obviously, tax filing is something that will take up a lot of time. One. Number two, as viewers, as lay people, we don't want you to burden with some lot of technical things which is really not going to help you, because obviously at the end of this masterclass you don't want to be tax experts, right? So what you want to know is that if I need to get my return done, what are the things that we need to do? So these are the 6 things today we are focusing on. uh, Moving ahead, so tax filing season. I mean, obviously, you will say that I've heard of summer, I've heard of monsoon, I've heard of winter, and maybe even spring. But what is this tax filing season, right? So, people here need to note that June, July for individuals, August, September, October for businesses. These months are referred to as the tax filing season because this is the time when you need to get your filings in place. Okay, so how do you actually wade through? Like if you look at the upcoming chart on the slide, you will see that an individual who is right now standing with a hand on his head there has to go through these stages by the 31st of July. So all seasons come to an end, right? So the tax filing season for individuals, which is what today's masterclass is oriented to, 31st July is the deadline. So by 31st July 24, you have to file your returns for the 12 months, which is April 23 to March 24, also called as the financial year 23-24. For this period is what you need to file your return for. So you need to have your documents in place, which is bank statements, Form 16, all the exemptions or deductions that you would like to claim. Then there is a special milestone here that you see, which is the AIS TIS 26AS. This may sound German and French to you. Don't worry, we have a separate section dedicated on that. So I'll even help you with what do these expand as. Don't worry right now. And all these you need to get done by the 31st of July. So today we are on the 1st of June. You have exactly 2 months to reach that. So why are we talking this to you on the 1st of June? Why are we not having this masterclass on the 1st of July? The reason is we believe that if you are well planned and you are well managing your taxes, you need to start not when there is 30 days left, but when you have 60 days left. Remember, my friends, the Income Tax Act says that you need to file your returns not on 31st of July. It says on or before 31st of July. So you can file it even in the month of June. There is nobody who is going to stop you. So for that, your preparation should start from today, right? So before we go ahead and see how do you prepare, we are all human beings, right? Whenever there is a due date, whenever you are being told that you have to do something by this, immediately the thought that comes to our mind is मैं नहीं करूंगा तो क्या होगा, right? So let's look at that. I mean, I thought this will make sense ki what are the implications if you don't do it by 31st July. So one is the big thing, which is opting for the new and the old regime, which a lot of which has been talked about. And I mean, if you have been followers of One Finance, there has been a separate uh, a masterclass on the new and the old tax regime as well, where we have spoken about how you have to select. So people who still want to fall under the old regime can do so only if they are opting in for it and filing their returns by the 31st of July. Which means, firstly, let me tell you, life doesn't stop if you don't file your returns by 31st July. You can still file it beyond that as well, of course subject to certain penalties. And one of the implication is not being able to opt for the old regime and the deductions that you can claim under it. So what happens, what are the other penalties for not having done within 31st of July, is in the next slide. uh, so I think I'll come back to this slide. We'll first go back to the consequences of delays. So one is, please remember that if you forget to file it by 31st of July, you may still file it by the 31st of December, which is another 6 months. No, sorry, another 5 months that you have on hand. And because it is 5 months, you pay a fee of 5,000. You may want to call it penalty, you may want to call it a fee, whatever. The government just wants you to pay that 5,000 as a late filing fee. So it's not an option. Without paying this 5,000, you will not be allowed to file your return. But we are lazy people, right? What if we forget to file by 31st December also? Then you can still file it up to 31st of March, which is the end of assessment year, by paying a higher fee of 10,000. But a small relief here for those of you whose incomes do not cross 5 lakhs, the late fee is restricted to only 1,000. Okay. Now, what are this is regarding the fee. Then comes all other, the interest for late filing will trickle in only if there is any tax that you are supposed to pay. So the first interest is this 234A, which says that whatever is the tax that you have not paid or which you are liable to pay before you file your return, on that you have to pay interest at the rate of 1% per month. Believe me, the higher your tax amount that it goes, this interest can be quite a pain, because 1% is not small, right? Every month, if it keeps on piling, it's a good sum. And Sonam, who is just sitting across here, Sonam, let me also share with you that in my experience, what is happening generally is that people hate to pay taxes, and they get into tears, especially when they have to pay interest on the taxes, right? So for all of you who don't want to get into that zone, 31st July is your date, right? Acha, some other elements of not being able to file your return on time. One is, some people have losses. Now, it could be a trading loss, it could be a loss under house property, or there are various kinds of losses that you may incur. So, what the law says is that if you do not file your return on time, you cannot carry forward your losses for the next years to be set off later, which means, uh, generally, loss when it comes to taxes, there are some good losses, because you are allowed to offset your loss against your incomes or profits and pay tax only on the net income. So while there is nothing stopping this offsetting of loss against your income in that year, even if you file a delayed return, the law is again liberal to say that if you have not been able to set off this loss in this year, you can carry it forward for, I mean, the longest period of time is around 8 years, so you can carry it forward for 8 more years to be offset against income in the subsequent years. But you lose that benefit of carry forward if you do not file it within the due date. Refund. So all of us like refund, like I mean, just sharing with you on a lighter note that last year, uh, and I think even the year before last, the income tax department has really upped their game when it comes to issuing refunds. I mean, people who have been filing their returns for last, say, at least a decade, will relate to when I say this key. There were times when you had to wait for, I think, 2 years, 3 years, 4 years, and beyond to get your refund. And the most painful part of this story used to be that if in 1 year you had claimed a refund and in the next year you had to pay, now human logic says that, hey, you have some of my money with you, so now when I have to pay you, why don't you offset that and I'll pay you the rest, correct? But income tax law doesn't work that way. It says एक year का बाद एक year you check the next year separate. So if there was any refund due to you, the department would keep the money with them, and you have to pay your dues in the next year separately. So this was like, extremely painful for people, because not getting my money but also having to pay more money. And sometimes refunds used to take, like I said, 2, 3, 4, 5. I mean, there was no end to it. But last 2 years, phenomenal change. I mean, we were joking with clients last year that even before our invoice reached them for filing, I mean, our invoices for filing their returns, the refunds were hitting their accounts. So they used to call us and say, hey, you have not sent us your bill, but we have got a refund already. So it's that fast. So if you are filing your return late, which means if there is any refund due to you, that will only come later, right? if you want that to come fast to you, if you file it on time, you get it quicker. One. Number two, there is also some interest that you get if your refund is beyond a certain limit, you're eligible for that interest. So the quicker you file, the faster you can get that with your refund back. Lastly, a very, very qualitative element that we have just tried to bring in here is that with number of people traveling abroad for holidays, visas, one of the requirements under visas, or a more serious implication is if you are wanting to apply for loans, income tax returns are like the first three documents that are always asked for here. So if you have not filed on time, it can have an implication. So we have people coming up to us saying that I'm applying for a loan, I have not filed returns for the last 4 years, can you help us to file returns for the last 4 years, because my financial institution is now asking me to submit returns for at least 3 years. So friends, there are limitations on how many returns for the past years that you can file. So keep that in mind, that if any time in the next 3 to 5 years you are planning to take a loan, you need to be on track with your filings, because that only sets a good example in the eyes of the institution who is now considering your case to lend you some money. So that is the other thing. So I'll just quickly go back to the last slide where I said we'll come back to it, which is what are the due dates. So you can check that due dates depend upon what or which category you belong to, right? So if you are a salaried individual, 31st July is your date. If you are an individual who is not salaried but has maybe business income or any other kinds of income without a salary, still, as long as you are not covered under any tax audits or under any company audit or an LLP audit, your due date continues to be 31st of July. For all businesses, specifically partnership firms and LLPs, who are again not subject to tax audits, their date is also 31st of July. And all businesses, whether it is a company, partnership firm, sole proprietorship firm, LLPs, whatever you say, for them, if they're liable to audits, the due date goes up to 31st of October. And lastly, businesses which require a transfer pricing report to be submitted, for them the due date is 30th November. Moving ahead, friends, before we go to the next segment, there's a small thing that I thought requires your attention, not only for the last year, that is for 23-24, but more importantly for 24-25. Correct? So what happens is, I have seen, I mean, when clients walk up to us and in the end, there is, I mean, before filing of taxes, when we show them their income and the tax computation, and we tell them that you are liable to pay some tax and you are also liable to pay some interest for non-payment of advance tax, immediately they raise their hand and say, hey, hello, I am a salaried individual, why am I required to pay advance tax? All my taxes are being deducted by my employer, no, so why am I still required to pay? Which is why I just want to give you a quick primer on what is advance tax. So let me put it this way: for all those of you who are a salaried individual, you look at it this ways. When you are entering or taking up your job, your employer tells you your annual salary package or CTC is, let's say for example, 10 lakhs. So your employer tells you, don't worry, you work for me for the full year, and at the end of the year I'll give you your 10 lakhs at one go. I am giving you your salary, right? So does it sound fair? Ideally, no, because you will say, hey, I have bills coming up every month. So if you give me money only at the end of the year, how am I liable? How am I supposed to meet my costs? Correct? Well, same thing applies for the government. So whatever tax you pay them is a source of revenue for the government. So if everybody pays their taxes only at the end of the year, how is the government supposed to function in the interim months, right? They also need money to keep paying expenses. That is the concept of advance tax. So what the law says, if any individual whose income tax, after adjusting for all kinds of TDS, TCS, as you can think, TDS stands for tax deducted at source. Like, every time you look at your payslip, you will see on the right hand side income tax. That income tax, since it is being deducted at source, is also referred to as TDS. So if your income tax after adjusting for TDS is a sum which is more than 10,000 rupees for the entire year, then even if you are a salaried individual, you are liable to pay advance tax. Which means what it says is, let's say your total tax liability on your salary income and all kinds of interest incomes or rent incomes or trading incomes, whatever it may be, let's say it comes to 5 lakhs, for example. And on that 5 lakh, against that 5 lakh, the TDS on your salary and TDS on your interest incomes put together is, let's say, a figure of 4.5 lakh, which means you have to pay 50,000 rupees more tax to the government. Now, isn't that a figure more than 10,000? Answer is yes. So what happens is, this 50 you have to pay to the government in 4 installments. Which are these 4 installments? Like you can see up on the screen, uh, 15 June, September, December, March. And there are percentages defined. So 15 June, 15%, by 15 September, 45, by December, 75, and finally by 15th of March, 100%. So you see, this table is important. So this 50,000, they are not expecting you to pay it by June itself. They say you pay me 15% by June and follow these percentages as per this timeline. Hence, my friends, we are talking about to you advance tax now, because as you see, we are on 1st June, right? So while you are preparing yourself for filing returns of last year for the current year, if you see that there is going to be some tax liable to be paid, you can start planning your advance taxes right now. So that's about advance tax. Uh, a quick question to you again, that while all of you know you have to file your returns, are you generally aware? And again, a tough question, are you already prepared with all the documents that you need? So this question is twofold. One is, first, are you aware? And if you are you already prepared? Let's have a quick yes, no, or a not sure. Well, I won't be surprised if the not sure button gets the most hits now. So last 5 seconds to close. Wow. So what I can see on my screen is that while yes is around 25%, no and not sure are equally divided at 37%. So this was my first guess even while you were voting, because um, income tax returns is a domain where people don't want to give a yes or a complete no. Not sure is like that area where, okay, I think I know, but I'm not sure whether I'm covering everything, right? So let's take a quick primer on what are the documents that you are supposed to be prepared with. So obviously, depending upon what kinds of income you're going to offer in your return, the documents that you need will vary. It's not like a one stop solution that everybody has to give these kind of documents. No. So we have just tried to prepare like a comprehensive list, or like a master checklist, which you can think, which is coming up here. So one is a PAN, Aadhaar, and if you are a salaried, then you need to give your form 16. If you are having interest incomes on which tax is getting deducted, or you have rental incomes, or you have any other incomes on which TDS is liable, like for example even dividends, So on dividends also, companies are deducting TDS. So you might remember some mail coming to you by, let's say, an Infosys or a TCS kinds of a company who gives dividend every quarter. They keep sending you an email saying that tax deducted at source on your dividend, right? So that is the form 16A. So you need to have that handy. Your bank statements for all the accounts that you hold. Form 26 AS and AIS TS. Again, these come, right? These also came in the previous slide, and I said that we are going to spend some time here. So for the moment, let's park it there. Your home loan interest certificates or the account statement, and any tax saving investments and capital gains. Post COVID, one observation across all mostly cases that we have been filing for, what we see is that everybody is either investing in mutual funds or they are investing in shares, and there is some gains or losses. So this is not discretionary. Even if you think that what happens if I don't show my capital gains on shares to the department, right? So it is no longer an option. Why is what I will cover when we talk about AIS. But for the time being, you need to collect your capital gain reports from your brokers. A rental income, be ready to have like the lease deed or something. Foreign income, before we come to foreign, dividend income, again, these will be available in your bank statements, but still, if you have the counterfoils. Finally, foreign income. So, depending upon an individual's residential status, foreign incomes need to be disclosed here. And there is a lot of emphasis on correct reporting of foreign income. In fact, I remember still last year, around in the month of July, the department used to issue ads. Ads is not the right word. There used to be inserts in the paper giving, informing taxpayers about the liability to disclose foreign incomes and foreign assets, because if you don't disclose them right, there are stringent penalties for not doing so. So this is like a master checklist. Your individual checklist could either be a part of it or maybe some things more depending upon how you do. But this is a decent guiding checklist. Yes. Now comes the time we ever have been pushing this for. Like, how many of you have heard of this ACE TIS? I mean, have you heard it before? One, a quick yes or no, or your responses could vary from I haven't heard at all, I know, or I know about it but thoda thoda, whichever. A quick click of hands. This should not take a lot of time. Either you know about it or you don't know about it, or you partly know about it. And believe me, my friends, for all those of you who think you have heard about it, and or who think that I know about it but why should I know about it and take it seriously, believe me, you are in for a shock, because when we talk about this, AIS expands as annual information statement, TIS expands as tax information statement. And going forward, believe me, these documents are going to be the key for all your filings. Let's see. Very nice. So the result is that around 25% of people know about it and are confident to click on yes. A minority, which is 7%, have not heard about it, and 70% are not knowing about this. So you cannot afford to even battle your eyelid now for the next slides, because this is what we are talking about. How can you make the best or the optimum use of government portals for utilizing information that they already know about you? So AIS, I'll repeat, it stands for Annual Information Statement. TIS stands for Tax Information Statement or Tax Information Summary. So basically, both these reports are the information which the taxman can see against your PAN, and which is populated on the department's software. And believe me, this software is collecting information from so many places, like your employer, your bank, your stock exchange transactions, your I mean, if you have given your property on rent and your tenant is claiming an HRA benefit for the rent that he or she is paying to you, even that is captured here. It also captures in dividends. I mean, you name the transaction, 90% to 95% of those transactions are getting covered here. Even post office deposits, post office RDs, post office MIS, whatever you say, wherever there is a PAN declared, slowly but surely these things are finding a place in the AIS or TIS, right? So how do you reach there? Correct. The biggest question is, am I privy to this? Can I look at my AIS TIS? Yes, my friends, of course. And I strongly recommend that today at 1:30 or maybe 1:45, after you're done with this session, don't worry, the session will get done earlier, but I'm assuming after that you'll have your lunch. So the first thing today you should do after your lunch is follow the steps. Go and check your AIS, and you will see like an ocean of information that you are seeing right there, right? So how do you land there? You go to the income tax portal. I mean, these are actual screenshots. Okay, so you go to the portal, and on the right hand side you log in. I hope you have your login details handy. Use them. When you get inside, this is the landing page, and here is a tab, AIS. Go ahead and click on that. When you click on that, what you see is in the next slide. This is what I spoke to you sometime back. So here you see, when you click on AIS, it takes you to a different page wherein it gives you instructions and also the AIS tab. If you see here, now, how the department and the portal is also improving over the last 2 3 years. So, initially they introduced AIS, if I can use the terminology, in a view only mode. That means you could only see. Last couple of years, they have improved it by saying that not only can you see, you can also provide your feedback on that. What do I mean, or forget me, what does the department mean by providing feedback? So what we're trying to say here is that, I mean, let me share with you. Last year, or sorry, the year before that, there is an elderly gentleman for whom we have been doing filings for the last, maybe I think, 10 odd years, right? Suddenly, when we were filing returns for March 22, and when we downloaded this gentleman's AIS, we saw some information about post office deposits. So we called him and said, "Sir, we require some data around this." His first reaction was, "Hey, I don't have any post office deposit. Last 7 years when you have been filing, you never declared it, no? As in, you never put it. So why are you asking me about post office deposits now?" So, friend, your answer was, "Sir, it's visible in your AIS." He took a day's time and then came back to us and said that, "Yes, I have some deposits in post office. Is it necessary to show it?" So friends, this is the point I'm trying to drive, that AIS today is like a mirror. It is showing you what your taxman can see. So whatever information is there in AIS, if you are not including it in your return, you are only fooling yourself. Because the way the portal is functioning now, key, the moment you file your return, there is a, if I can use the word, AI at the back end, who is comparing that this is the information in the AIS, this is the information you have filed in your return, are they matching? If yes, here, take your refund, or if there is some money due to me, the department, pay it up. But if there is a mismatch, immediately comes an email to you saying that we have found that there are some income elements in the AIS which you have not declared. So if you don't add it, we will add it to your return and then send you a revised computation. It is this. I mean, I'm 120% sure some of you in the last 2 years would have got a communication from the CPC after you have filed with this error. Not an error, with this information saying income in the AIS, not in your return. And for all those of you who have not got this email, a pat on your back, so that just because you have been very diligent in offering all your incomes in your returns. So for this year, which is AY 24-25, there are some genuine cases where some institution might have uploaded information about your return, about your incomes, which are not yours. Sometimes it happens that a pan has one alphabet or a digit wrongly quoted, or whatever the reason is, it is genuinely not your transaction. So then what do? Doesn't mean just because it is appearing in AIS you have to disclose this, correct? So you have a choice, which is why they say that when you look at all your transactions and you see a one particular transaction which doesn't belong to you, you can provide your feedback there saying that it doesn't belong to me. Or I will put it this way, let's say you and your spouse are holding one FD, okay, in joint names. Now the rule with income tax is that the first named depositor should take that interest in his or her name, right? But because you are a joint holder, in your AIS, the interest also comes in. So there you have an option to say, this does not belong to me, this belongs to my spouse, and you can quote your spouse's PAN in that and you can skip it. So you don't have to take that interest also in your income, right? So this is one example of where you may say that this is not my income. Otherwise, mostly you have this. So these things you can do. If you look at the next slide, when you land on the next tab, here you see AIS, which is the taxpayer information summary and the annual information statement. You can click whichever you want, which year you want it for, you can select and then click on download, and it comes and resides in your machine. But if you want to go online and see, this is how it looks. Like you have a under AIS, you have the general information giving your date of birth, name, and PAN, Aadhaar, etc. And part B is where you should focus on, where it shows your all incomes where there is TDS or TCS, SFT. SFT stands for specified financial transactions, or any taxes that you have paid, or if there is any demand pending, or any other info. Taxpayer information summary is like a as the name says, it's a summary. So it beautifully summarizes what is your total salary income, what is the total dividend income, interest from savings bank. The most easily forgotten element by taxpayers. They feel savings account is anyways giving me only 3.5 to 4% interest. Am I supposed to pay tax on that also? The answer is yes. So if that, even this is getting populated, sale of securities and units of MF, purchase of securities. Friends, believe me, the AIS has become so intelligent that not only do they show what mutual funds and shares have you sold, it is also showing you whether the gain that you have got on it is long term or short term, and how much is the gain. The only thing which it is not showing today is what is your cost, but it is also capturing long term, short term gains. So download this today and see all this for yourself. Uh, yeah. Plus, it also shows you if you are liable under GST, what your turnover is, what money you sent outside, not only what you sold, but also what you purchased. I mean, amazing, amazing, simply amazing. Go ahead. Now, see, last year, something like this didn't happen and you didn't know about AIS, correct? After you filed your return, suddenly somebody tells you that you should have shown these capital gains. Okay, let's talk about today. No, last year ka return you have filed. Okay, today I am telling you that you can go and check your AIS. So you are smart, you go and download AIS for last year also, and suddenly you see, oh, there is some capital gains which I have not shown. So you have to, that this is a mistake which has got committed, right? So like this, has there been instances in the past where you have made mistakes and you have felt the need to revise your ITR. Any idea? I mean, a quick poll. Yes, I like this option. Yes, multiple times, or no, never. But even if you have not done it multiple times, even if you have done it only once, you can still click on yes. Yeah. So, last 5 seconds. And very good. So, all those who have clicked no, which are in the majority as high as 77%, it can only be two things: either you have never realized the mistake, or then you are really those diligent taxpayers who have been very accurate in terms of their filing. But friends, don't worry, mistakes happen. It's not always deliberate, correct? It could also be an error that might have happened. So if these situations occur, that's why we said that this feedback is available on the AIS transactions, where you have these four options which you can reply to some specific elements of income. How to submit feedback is again simple. Go to the portal and select the AIS like we showed you on that screenshot. uh, Under that respective tab of TDS and TCS info, you have each income element laid down separately. You can go to the respective income element which you think is not yours, and there is a drop down menu. So you select which the four options which you showed you in the previous slide, and you click submit and say go ahead. So the department will automatically correct the information in the AIS based on your feedback. Now comes to one of the most important or the most liked element about ITRs, which is refund. I mean, the moment you hear about a refund, people become really ecstatic. And in especially in business cases, I think it happened. This happened last year. Like, a businessman got his refund. He sends me that message when it came, refund credited, and he, what his question was, ऐसा भी होता है क्या? I mean, he was surprised कि do I get back money also from the department? The answer is yes. And if I can call it सोने पे सुहागा, is that nowadays you're getting it even faster, right? So how do you make use of the tax credits, right? So firstly, to claim the income tax refund, what is important is you cannot sit in the comfort of your home seeing that, okay, I have a refund due, and assume or expect that the refund comes. What is needed is you have to prepare your ITR, file it. Most important, e-verify. What is e-verify? So there was a time when you used to physically file your returns and sign it, right? After that came up the e-filing, wherein you used to take a print of the ITRV, again sign it and post it to Bangalore. But that is all archaic now. There are so many ways you can e-verify without having to sign and post it, which is you can e-verify it using your Aadhaar OTP, using your net banking OTP, using your DMAT OTP. I mean, there are at least five options you can do. And if nothing of this is available with you, you can still sign and send it to CPC. But remember, you need to e-verify it, and you need to e-verify it within 30 days of filing. If you don't e-verify within 30 days, return is assumed to be not filed. So till the time you don't e-verify, the department doesn't process your return, and if it doesn't process your return, the refund, if any due, doesn't come to your account. So simply put, if you want your refund, finish your e-filing, e-verify, and then you will get your refund. Quick, before we jump to some questions, if there are any, a little bit of guidance for first time filers. So things that first time payers should do is obviously understand your total income, be clear on which tax regime that you want to opt for, because salaried individuals are one of those preferred, or I would say lucky people, who have the choice to deviate from the tax regime that they might have declared to their employer. So for example, if I am a salaried individual, in the month of April 24, I told my company to take me under the new regime, for example. But in June or July next year, when I'm filing my return, I can still go and opt for the old regime. Okay, because I'm a salaried individual. This privilege is available only to individuals. So you collect all these documents that we discussed today, decide based on that which ITR form to file, and basis that, keep the documents ready, file it on time, know the deadline, and like I said, the last part, don't forget to e-verify, because only after that comes the next step. Yeah, same thing. And like it is said, don't forget the second point, that don't feel shy of taking help of a tax professional, because many a times people who feel that returns are DIY, yes they are, but you need to take some effort to be aware of what are the latest things. And also, like, there are people where whom we have who have come to us, or any other professional for that matter, who have filed a return, and then comes the sweet letter saying that we know that there is income in the AIS, but you have not shown, and then they think like, oh, what to do. So, in order to avoid this, you can always take help. And people who don't like to pay any additional tax should realize that if you file it on time, you don't pay those interests or penalties. And with that, Sonam, we come to some Q&A if there is.
Absolutely, Arvind. Arvind, this was very insightful. There are a lot of links that you have talked about.
Yeah.
We'll try to see to it that we share it in the comments. All the links that Arvind has talked about the complete tax filing that is required for you all the documents. This recording is also going to stay on the platform, so you can use it as your checklist as you're comfortable with. Most importantly, you said that you need an advisor. Yes, there are a lot of things that keep coming, new regulations, new ways of doing things.
Yep.
It's very important that you have a qualified financial advisor with you. So obviously, Arvind Rao sir is here already, and also not to forget, One Finance itself has been supported by a lot of qualified financial advisors, and we at One Finance are giving ITR filing for free. So if you become a customer of us, go download the One Finance app, and as a part of financial planning, we give you ITR filing for free. So please come to One Finance, download that app over there and get it sorted. We have execution support for y'all, and we will take care of maximum things that you will need for your tax season to go absolutely quick, secure, and easy. Do not worry, we do not record any of the numbers or something that you should be worried about. Definitely download the One Finance app, and we'll be there to help you with this tax season. All right, so let's get the question and answer started
Sure.
over here. We have a first question from Avinash, who says, how should I plan my taxes if I'm expecting a significant increase in income next year? So do they need to plan their taxes already? Do they need to pay it already? How it goes about?
Uh, so for a moment, let's assume Avinash is a salaried individual.
Yes.
So if he is, then any increase in his income will already be factored in by the employer, your company, and they will be proportionately increasing the taxes as applicable. But I think since Avinash used the word significant,
Yes.
so a word of caution here, Avinash, that what you could do is you could keep an eye on your other incomes. And I think we should mention this, that specifically if this significant increase pushes your income close to 50 lakh zone, so what happens is incomes beyond 50 lakh attract a surcharge, and that surcharge is around 10% on the tax. So if you're looking at a scenario where the salary is, let's say, 49 lakhs, and your other incomes are going to push your total income above 50, then you should rework your computation and take care of the surcharge, and maybe pay some advance tax beginning 15th of June.
Okay, that's the details for you. Nikita is here. She's asking, what steps should I take if I disagree with a tax assessment or demand notice?
So again, you'll have to provide your feedback on the
Yes.
portal, because when you visit your portal, and when you go to an outstanding demand, you have two options: yes, I agree with the demand, or yes, I don't agree with the demand. So the moment you say I don't agree, it asks you for some actions that if you have taken. For
Yeah.
example, submitting to the officer what is wrong or something like that. So there is an option to do.
All right. Chintan is asking, how should I approach tax planning if I'm considering starting my own business or side hustle very soon, but it's still the start and there's nothing really I'm doing about it? This will go from situation to situation.
Yeah.
Absolutely, you should check with your CA or with a qualified financial advisor over here who will help you with these new milestones or new things that you all are doing in your particular life, and definitely they can help you out with that. Okay, Ankita is asking, with the budget coming in, okay, they're talking about the union budget, so we're going to be having one again.
Yeah.
And are any new changes and tax implications possible?
Yeah, Ankita, your guess is as good as mine because I'm not privy to what's coming up in the budget. But yeah,
Absolutely.
theoretically, anything is possible.
Anything's possible. Okay. Shrey is asking how to stay updated of all the latest news and trends and rules regarding this personal finance taxes. Is there a way I can keep a track of all of it myself so I can only do all the procedure?
uh, a very commonly asked question.
Yes.
So I think the income tax portal, which is maintained by the department, is quite informative, and you can capture all the new changes that happen. They publish it there. So income tax e-filing, or there is also an income tax india.gov.in site.
Okay.
So either of these can be checked for
Okay.
this.
Okay. Nishant, we have this question from Nishant who says, do I need a CA or I can do all of it myself also?
So unless you are required to have your tax audit report submitted, that's the only place where there is a compulsion for a CA. Otherwise, you can always do it on your own.
Okay. Abhishek is asking this question. Does tax planning should be done every year? Small changes in income only happens. Can I follow the same plan? Again, it will be situation wise, absolutely. Even if the income is increasing a little bit, also, you are in the tax bracket, not in the tax bracket, it makes a big difference first. And second, most important thing, that filing the same plan, you're not going to have the same long term plan, right? Your lifestyles or your milestones are going to change, and
Correct.
accordingly, your tax planning has to change. I hope I answered that properly.
It is, and I think just a subtle thing that, sorry, I didn't get the name.
It's Abhishek.
Abhishek. So I can just say that even if you were to review the plan, for sure it will not cause any harm to you. Whether there is any benefit or no, that the situation will say, but there is no harm that will cause. So
Yeah.
it's always better to review.
To always review it. Okay, let's take this last question we have. If I don't understand anything about tax filing, ITR filing, still if I go on the sites and can absolutely check myself everything and can manage everything on my own, or no, then I should directly go to a CA and take a help there. I think he has answered himself only the question.
Well, your thoughts are in the right direction. You can take a call in terms of how much time and energy you have to read through, understand, absorb, and then implement. Or, it's so I can also cut my own hair, but you always prefer to go to a barber and get it done, right? So
Yes.
it's the same analogy.
Okay, I'm getting one more question, please, Arvind.
Sure.
Slok is asking, my AIS shows a 10,000 term deposit interest from post office, which is maturity amount from Kisan Vikas Patra. My tax slab is 30%. Can I show this interest per year for the last 8 years? Or do I have to pay tax on the entire interest amount this year? I was not liable to pay any taxes till last year.
Uh, Good question, Shlok. So, for things like KVP, the Kisan Vikas Patra,
Yes.
or the NSC, which has a cumulative interest, as an individual, you have a choice to either break down and offer that interest every year, or you pay the tax at the maturity. So, now, since you're getting the money at this point, which is already 8 years later, you cannot go back and split the interest for the previous year. So,
Yes.
you'll have to offer it now. But I think going forward, if you are planning to again do it, you can start offering it year wise.
All right. I'm sorry, Arvind. We are getting some more questions. Let's just take it. Let's just take it for 5 minutes, please.
Okay.
Pradeep is asking, I'm a salary person. The reimbursement which we are getting from company is part of the taxable income?
No, it's not.
All right. Madhusudan is asking how to work out the indexation benefit of CPI calculation applied for property sales in arriving at capital gain or loss, etc.
So again, you can look up on the portal. There is a cost inflation index table that has been given. So you have to, let's say you bought a property in the year 2010 and you're selling it today. So what you do is you take your cost of 2010, you multiply it with this year's index, which is 24-25, and divide that number by the cost inflation index of 2010. So numerator में the year CI in index of the year in which you are selling, and in the denominator will be the index of the year in which you are purchasing. If you do this math, you will get your indexed cost.
Okay. Ashish is asking how to calculate advance tax in fast and easy manner.
Go to an advisor.
Vikas is asking what if organization has not paid tax till date for the last financial year? This will impact my returns. They are deducting from salary but not crediting to government. Uh,
Change your job, because
I'm
that
not
is
in this.
I mean there is something wrong,
Yeah.
because that should generally not happen, because but I'll add one good news for Vikas, that there are case laws which say that if your employer has deducted and not paid, then the employee is not subject to any penalties or interest. It will be the employer who has to pay that. But you need to keep a trail of this.
Absolutely. And most importantly, go and talk to your employer. I think it's the best way is communication with your employer. So please keep that very clear. Anil Rao is here. He's asking for donation receipts come under which category?
ATG, that's a deduction you can claim. So that's the section under which you can claim it.
All right. I think we should end the questions because we're getting a lot of them. We'll try that Arvind goes back and replies back the maximum people he can. Before we let you go, and before we let Arvind go here, thank you so much for this insightful session.
It's been a pleasure, and I'm hoping that our viewers are able to absorb at least 60 to 70% of this. It will do
Absolutely.
quite good for
Absolutely. And most importantly, this all recording is going to stay on the One Finance website, on the Twitter and LinkedIn platforms of One Finance. You can always go and watch it out again to have those checklists and all in your hand while you are getting ready for this tax season. And most importantly, if you need a financial advisor, if you need an advisor who can help you out with all of this for your tax planning, all you have to come is at One Finance. You can download the One Finance app. The link to download the app is in the comments. Please go ahead and download the app and get your process started. Today is the 1st of June. It's the perfect time to start your tax season. Okay, everybody, have a good evening. Enjoy yourself and a happy weekend. Bye bye.